Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on CMG SKX NKE and TWTR. The CMG bulls continuing strong. The highest price we saw on the reaction to earnings was $434.58, and we did break that level, but only by 11 cents, so it is clearly a resistance level to be keeping an eye on. The bulls are still strong. We saw 5 green days in a row and a nice uptick in volume. But if we can't see a more convincing break of 434.58, we will look to consolidate and form a new higher low. And as long as that higher low occurs above 419, make that above 412.77, the low of this consolidation here, as long as it occurs above that, it will be a higher low on this daily time frame. We're looking for the turnaround here on the weekly trend. We have the 50-week moving average becoming support for the first time in a long time. The weekly upper Bollinger Band resistance is 435.83, so that is the next resistance we're looking at if we do get that more convincing bull break. And in order to change this trend, these are the major resistances: 440, 440.120, and 444.13. Break those levels, turn those into support, and we're going to be looking at a trend change. We can already see we're leveling out and trading horizontal, and now we're going to be looking to form higher lows and higher highs. The Bollinger Bands need to ascend to the upside to create some room, and we are getting closer and closer, step by step, to a trend change on the weekly time frame to favor the bulls. All about the low 440s at this point. SKX weak bounce so far, lack of follow through. Well, actually, we did see follow through today, but the upper wick shows profit taking, and we have resistance at 26.85 and now 26.76. So if we pull back from here, we have the 200-day moving average support at 25.55. Bulls are going to be looking to maintain that level, and otherwise we're going to be heading down to fill the gap. So weakness on this bounce attempt, not exactly a lot of strength and confidence for the bulls. Weekly time frame, trying to get back over the 50-week moving average. We rejected from it back in December, turned it into support, couldn't hold it back on the back test as support, and now we're at that level yet again. And it's 26.32. So the bulls seeing a battle around that level, but if we do continue to fill this gap to the downside, we will lose that support. So where we currently stand, it is all about these key moving averages, the 200-day being the most notable. Otherwise, we're looking to the downside. NKE, bulls breaking out. So the more and more we see upside, the closer and closer we get to key $60 resistance, and that level here on the weekly time frame in the lower high pattern, 59.95. So if we head straight up to that level without a ton of consolidation, and if we have an RSI in the 70s or 80s, it's going to be a nice bearish entry opportunity in my opinion, and we will use that 59.95 level as top fishing. So we are currently about 2% plus away from that level, 2 to 3%, and we are going to be scouting for that bearish entry because the bulls have seen so much upside. They are tiring themselves out to the upside, in my opinion, and we are going to be watching very closely. So that could occur sometime in the next week or two, and the bulls are clearly in control on the daily time frame heading up into that level. And if it times itself with the market consolidation that we know is coming and we're just patiently waiting, then it's going to add to the nice timing in terms of another lower high, market weakness potentially bringing NKE back down to earth after this big bull breakout. So keeping a close eye on that bearish entry and utilizing the overall market for that momentum to the downside if that does line up in terms of time frames. And last, we've got Twitter. Twitter is still consolidating nicely here, and I compared Twitter to GoPro, and we saw GoPro fairly similar consolidation and then follow through today. The bulls showed up, and we saw that oversold bounce, normal healthy consolidation, and then continuation. And we look at Twitter, we have our oversold bounce, normal healthy consolidation. We don't have that continuation yet. Bulls need to hold 1630, and they want to see a break of 1669 and 1689 to see higher lows and higher highs on this oversold bounce. So the Twitter bulls are still barely hanging on. And if we do break 1630, we are looking back down towards that recent low down at 1550 and 1551. So still seeing weakness on the 50-week moving average, or I should say the exponential weekly moving averages. And we're looking for the Twitter bulls to either head back to the upside by breaking 1669, or like I said, a break of 1630. That's a bearish entry on Twitter. And if same thing, if the consolidation in the market lines up here with the timing right, we could get a move back down towards the low 1550s, maybe even ride it all the way down back towards that all-time low of 1372. So always scouting these bearish names for when the market sentiment shifts, even if it's in the short term, normal healthy consolidation for the market overall, these names should see some pullback. So scouting NKE with $60 resistance and scouting Twitter 1630 support, but I would not be surprised to see the bulls hold up well and see a little bit more upside. Again, depends on the overall market. That's definitely a big factor in deciding whether or not to make any bearish plays on these overall long-term bearish downtrend weekly charts. So I appreciate you watching. We will check back in. Have a great night.